Guys, welcome to the Bitcoin with Dini podcast, and I'd like to welcome Peter Dunsworth all the way from Sydney. Peter, what's crack?
Jenny, it's a pleasure to be here. Thank you for inviting me on. I'm really looking forward to this conversation.
Yeah, me too, man. Like, you're the guy that's done the maths on the $7 billion Bitcoin valuation. So I want to get into that in a little second. But before we do, just give us a little introduction into how you got to where you're doing and sort of what your background is, Peter, please.
Sure thing. So I run effectively a Bitcoin advice business that was effectively spun out of a business that I run or that I've run for the last 10 years, effectively doing multifamily office. A multifamily office is basically giving investment advice across a broad range of asset classes, including property, bonds, stocks, alternative assets and commodities. So for the last 10 years, I've been doing that. Prior to that, I was giving financial advice and specializing in superannuation, which is equivalent to your pension system. Basically wrote a course on borrowing money in superannuation or pensions, advised the Australian Tax Office and ASIC, which is the equivalent of the SEC, as a regulatory body on borrowing money in super. And then prior to that, I was on the other side of the balance sheet in credit, basically looking at mortgages, assessing risk. And prior to that, 25 plus years ago, I was at BT Funds Management, which was an investment firm which had the illustrious record of basically picking the 1987 stock market crash. It was about the only company that made money. And then maybe 10 years later, I was, or a little bit more, I was in that organization. And sadly, it had lost a lot of its shine from that moment. But that's a brief background about me.
Awesome, man. Um, you've got some serious experience on all sides, I guess. So, what better guy to sort of talk to us about Bitcoin? And let's get straight into it. Let's not hang around. I listened to a podcast, and you literally broke down the $7 billion Bitcoin valuation. Can you sort of walk us through that? Because to our average no coiners like I, who don't understand Bitcoin, that's just crazy stuff. But walk us through the numbers.
Sure thing. And probably I think more important than actually walking through the numbers is actually walking through the valuation framework and the
Sorry,
way of thinking about Bitcoin, which I think is more important because the $7 billion Bitcoin it sounds like a ludicrous number, but when you put the framework around the thinking that gets you to that number, it's a completely different situation. And this is where the $7 billion number is a fabulous number to talk about and think about. And, we all dream of that. And think one day, wouldn't it be wonderful if that were to happen? But for me, where I get the most juice out of this is actually putting a framework around that thinking, and then offering people to debate or discuss the framework that we've put around to get that number. And I'm yet to find someone who has had a legitimate argument as to why that wouldn't be the case. And what I'm hoping to do is basically give you that framework. So there are sort of two ways of thinking about Bitcoin, I see, from a valuation framework. There's a very basic model to think about. And if you understand what Bitcoin is and you've done the work on it, then I think you will appreciate that Bitcoin is fundamentally the first store of value, mean of exchange, and unit of account that effectively operates as the best of each of those functions of money. And once you understand that, you realize that in the future, people aren't going to accept anything other than Bitcoin for a payment. It will effectively be like highway robbery, accepting US dollars or, the British pound or whatever we're using, Aussie dollars, it'll be an insult. And, if you if you tried to pay for, goods and services in Ireland with a Venezuelan bolivar, you'd probably spit on them. Like, what is this crap you're trying to give me? It's horrible. And once people understand and the education around Bitcoin's widely understood what it is, people won't want to accept anything else. So that's a fundamental premise of, the foundational framework for it, that it's a better money than anything else we've seen. And my thinking on this is that we've got 900 Bitcoins that are minted on a daily basis. And there's roughly $6.3 trillion of global trade. My expectation is that the Bitcoin that's been minted so far will be in cold storage or will be used in the form of basically in the credit markets as collateral. And we can talk about that later. But fundamentally, the 6.3 trillion of global trade that's facilitated on a daily basis will need to come from what's ever minted on the day. So if you look at, the current epoch that we're in Bitcoin says that there's 900 Bitcoins minted on the day. That represents a $7 billion Bitcoin when you divide 6.3 trillion by 900 Bitcoin. And where things go askew very quickly is that, in less than a year, that number will double from 7 billion to 14 billion because we've got half as many Bitcoin coming to market every day. So the numbers get exponential very quickly. And this is where the framework around that's one way of sort of thinking about this. The other framework, which I think is a much bigger number than that, but it's a much more solid foundational framework for thinking about a valuation framework, is thinking about Bitcoin as the first triple point asset. And the triple point is sort of a term I've coined in thermodynamics where an element such as water can be in 3 different states at the one time. So in a beaker under certain pressures and temperatures, you can have water in 3 different states at the one time. So you can have it as water, ice, and steam, which is an odd sort of thermodynamic principle that is really weird to think about. And what I think Bitcoin is for the first time in history is the first triple point asset, in that for the first time in history, we have one asset that basically is the key or the number one function of money across all 3 functions of money. So if I think about that, it's the best store of value, it's the best mean of exchange, and it's the best unit of account all at the one time. So thinking about that, when you look at economics and dynamics around markets, what that then creates I believe, if we have one asset that's the best at all 3 functions of money, and we've never seen this before, you effectively now have a competitive tension between store of value and unit of account and mean of exchange to get as much of that Bitcoin as they can for the function of money that it's trying to achieve. And this is where, if we look at how people assess Bitcoin at the moment, they think that they're thinking on a linear accretion of value. And they think that, okay, well, if store of value is a $10 trillion market cap and mean of exchange is 100 trillion and unit of account is 2,000 trillion, what we need to do to assess the total addressable market for Bitcoin is we need to add those 3 values together. So we need to add 10 trillion, 100 trillion, and 2,000 trillion, and then we need to divide it by 21 million. That gets us to roughly $100 million a coin. But my summation here is that is the wrong way of thinking about it, because you're thinking about those individual functions of money separately. And when you have a triple point asset that's the best at all 3 at once, you now have a competitive tension where each function of money is actually competing for that Bitcoin because it serves the highest function of each function of money. So rather than thinking about it in a linear accretion of value, it needs to be thought of as an exponential. So it's more like 10 trillion multiplied by mean of exchange 100 trillion multiplied by 2,000 trillion unit of account. And then this is where the numbers break and it doesn't make any sense. So it makes the 7 billion look totally conservative, but from a valuation framework, I think it's far more sound thinking about Bitcoin in that capacity because it brings in a whole host of underlying economic concepts that are provably sound.
Yeah, and I suppose as well, like the store of value aspect almost steals liquidity because you're incentivized to not give up the store of value, and therefore that aspect of the triple point doesn't have liquidity really. Like, I suppose when you really understand it, so it does blow the mind, the exponential potential, I guess, that we have in front of us, and that's why I'm on social medias every day pounding the drum and just going, just get a little bit for a pension strategy. Even if you hate it and you think it's crap, just cover yourself with 0.5% and there's nothing to lose. You're covered.
That's great advice. I hope people listen to that and take action on it, because if it does what we think it does, then to the advice you give all of your clients, that'll be an early retirement.
Yeah, for sure. And I'd like to get into sort of our pensions, or as you guys call them, supers. Traditionally in Ireland, I'm not sure what it's like in Australia. I think it's sort of simple. I think you might even have to mandatorily contribute. But the basic strategy for normal people like myself before I was financially educated, when I struggled with money, was just like earn money and then give it away to someone else, to, a pension guy. And then over the years, I've sort of learned, That's not quite as efficient. I prefer to manage the money myself. I can do a better job. And as going down the Bitcoin rabbit hole, you start to realize I don't think traditional pensions are as low risk over the next 10, 20, 30 years as we're led to believe. And on the flip side, I meet clients who are in their 60s and 70s and they just come into my office and go, Dinny, the pensions is a scam. I contributed to 30 years. I'm getting 200 quid a month. It's barely worth me driving to pick the thing up. Or, what's your take on that? Do you think the pensions, our traditional pensions or supers, are as low risk as we're led to believe?
No, I don't. I think there's a huge amount of inherent risk that's totally overlooked because it's assessed by people who are currently in the system who have a vested interest in making sure they overlook the inherent risk in the system. So this is where a counterweight to that risk that you can take in your pension system is to have an asset outside of that in Bitcoin. And this is where I think it's the ultimate hedge. We talk about having maybe 5 to 10% as a conservative figure of your investable assets in Bitcoin as a hedge against the system blowing up. And I think that's a fairly reasonable thing. To answer your question about in more detail about the pension system, depending on where you are, depends on how well funded these pensions are. So in the US, there's a huge liability mismatch on a lot of their pension systems. In Australia, they have far more stringent requirements that there's no sort of I'll pay you back later with the pension systems in Australia. You have to pay up front, basically, and there's some big legal ramifications if you don't. So there's less of a scam in Australia relative to, say, the US, because those big US pension funds can basically put the amounts owing on the pension liability and the payments that they've got to make on the never, saying, oh yeah, we'll catch it up. And basically they force themselves into a Chapter 11 or a bankruptcy type arrangement to avoid any future obligations for those pensions. I'm not quite sure how it works in the UK, but I'm picking it's going to be a choice between a whole range of different investment options that you've got, typically stocks, bonds, property, or commodities. And this is where, on a personal level, currently there is a huge understatement of the risks involved in investing in property, investing in bonds and stocks, and there's a huge overweight or hysteria around the risks involved in investing in Bitcoin. And if you know how to self-custody your Bitcoin, which is some of the work you help deliver to your clients, the risks are nullified, and there's a complete arbitrage with the risk reward ratio to Bitcoin v everything else. And your pension system literally, or in England, in Britain, basically nearly blew up last year. I had a client basically send me $100 or £100 invested in the pension system in a 40-year bond, 40-year gilt, sorry, I should say, being cognizant of what's happening over there. And, that £100, 11 months after its purchase, was worth £25. It had lost 75% of its value overnight. And now, if you were to sell that, you'd lose 75% of the value of your pension fund if you were fully invested in that. However, if you held that for the next 39 years and 1 month, you would get your £100 back. But there's an opportunity cost because the 40-year gilt is basically trading at a 4 and a 4.5% interest rate now, 11 months after you purchase it. So that money's basically ripped up and gone. And this is the thing that people really don't understand, is that bonds are really risky because you can rip up capital never to see it return. And everyone thinks, oh, it's a bond, it's government guaranteed, I'm guaranteed to get my money back. But think about the fact that, that person who purchased bonds in September 21 basically had to hold for the next 40 years to get their £100 back. And in the meantime, we've seen 10% inflation rate in the UK and all sorts of, nonsense go on. So
you're guaranteed to lose money.
Correct. Literally, you are guaranteed to lose money. That's from a bond perspective. And then you look at the stocks. The stocks don't look too crash hot either. And property, well, that's kind of a function of, the cost of capital. And we've just had the cost of capital rip higher by about 4% in the UK. And it's worse in the US. It's ripped 5.5%. In Australia, it's ripped 4.5%. And there hasn't been the adjustment or the necessary adjustment in the property values to account for fair market value, given that your cost of capital's gone up 4,000%.
Brilliant. I bet my audience wouldn't forgive me if I didn't educate you on geography and just say that we are the Republic of Ireland, so we are not the UK. We did hear about that, but there'd be a bone of contention if I let that slide.
I think there would have been celebrations in the pub that it was happening in India.
Perhaps, but
A
no, no,
national
no.
national holiday declared down in Dublin.
No, 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 not at all. But I want to, yeah. Let's chat a little bit. Like part of what I do is teach people the difference, not only about how to understand Bitcoin, what Bitcoin is, but because the majority of the world are at the zero stage. So they come in like I did many years ago, not knowing the difference between Bitcoin and crypto, and thinking it's just like it's all the same, and it's just, well, this one's priced at this one and this one's priced at this. So we're valuing things on the price of them, which is not really how to value stuff. But maybe give us your understanding of why you came to the conclusion to focus on Bitcoin and not crypto.
Boy, that's a deep question. I think on a very surface level, the investments we make are typically for long time frames. We're talking about investing for intergenerational wealth. Intergenerational wealth requires a long-term focus, and a determination that these assets are going to be held for significant periods of time. On a personal level, I can't get comfortable with anything other than Bitcoin is going to be around in 10 years or more. A lot of people talk about Ethereum being ultrasound money. I'm like, when I hear that, I just, maybe a shake of the head, and it signifies that people have zero understanding of what economic fundamentals are and what makes up sound money, and a lack of history. Ethereum, although it's a wonderful protocol, it's brought some innovation and some cute tricks I look at. It's not sound money, and it doesn't have the ability to function as money. It has the ability to be manipulated, and for that reason, it has the ability to be controlled. So my estimation is that people are going to want something that they can't control, that can't be altered, can't be changed in perpetuity. And there's only one currency or one asset that does that, and that's Bitcoin. So for that reason, I think Ethereum is the best of the altcoins or shitcoins, whatever you want to call them. And everything is significantly worse after that. So I think there are some unique protocols that I think are interesting, that have some genuine tech innovation behind them. I look at MakerDAO and think that's really interesting and has some exceptional insights. I look at Filecoin and what that's been able to achieve, but I think the token itself has been bastardized and corrupted. But IPFS is a really interesting protocol that I think will be broadly rolled out. And what MakerDAO does, with effectively being a central bank that's got no decision makers in it, I think that's a great step forward too. But it's not Bitcoin, and this is where Bitcoin, I think, has the ability to be 50% of all transactions globally, and a whole lot more, because it has the store of value. It's got the mean of exchange, and most importantly, and this is the most underrated thing about any of this, is that it has the unit of account. And so the unit of account is where all of the juice is from a value perspective. There's $2,000 trillion worth of value accounted for on a daily basis, and it all sits on the unit of account in our double entry ledger systems. Bitcoin is an upgrade on that double entry ledger system, because it's a triple entry ledger system, and it's an immutable ledger. It cannot be changed. So for that reason, none of the other protocols come close to it for that perspective, and people don't really understand how much value can accrue to Bitcoin. And when you look at it on a risk-adjusted basis, I look at the risk of Bitcoin falling over in the next 10 years and put that at less than 1%. And I put the probability of it going up 100 or 1,000x in the next 10 or 12 or 10 or 20 years as over 90%. Whereas it's completely inverted for every other cryptocurrency. I think there's a 99% failure rate in the next 10 years for less return. So why wouldn't I have more money in Bitcoin and zero in the others?
Yeah, it just makes sense. To me, like the job of a pension to me is to protect capital and grow it, but protection is the priority, and that means beating inflation and and having a return. But it wouldn't make sense if I rang up my traditional pension manager and he was like, well, I invested in all these startup companies and sorry, we went to zero, but next year there's some more new ones coming out. You're like, what are you out of my money? This is my pension, man. So for me, how I look at it, I'm just like, and again, the conclusion is too simple. But what I do here is teach people about how to create a plan B pension, and Bitcoin fulfills all those needs. It doesn't have the risk like any other crypto token go to zero. It won't affect Bitcoin. However,
Yes.
the inverse isn't true. So if
Mm.
you know, if Bitcoin doesn't work out, nothing in this space, I believe, works, because Bitcoin moves this market. Whatever Bitcoin does, everything does. And with Bitcoin being backed by energy, with proof of work mining, it just separates it from everything. It means it's impossible to stop it at this stage, I believe. And it's got the network effect, it's got the dominance, it had the fair issuance, it didn't have the pre-mine. You know, it's not controlled by humans anymore. Although it's ran by humans, I don't believe it's controlled by humans. You know, so it's a very different asset when you do get under the hood and look at it, and it fulfills, for me, it's the perfect pension vehicle. And I believe in the future, most pensions are going to be the majority in Bitcoin, and the people won't have to risk their money because, you know, you probably come across, well, I don't know if you do because you deal with high net worth, but I deal with, you know, retail people and small business owners, and we come across horror stories where people can't, they just don't have anything to save in. So we have to take risk. We have to speculate on property. We have to speculate on stock market. We have to speculate on some collectibles. And then sometimes it goes wrong and you've undone 10, 20 years of your life's work and time gone into something. And of course, I'm getting into philosophy now and going on a rant as I tend to do. But like, Bitcoin fixes this, and that's why it's the perfect pension.
It really does. I agree with all of those things. And this is probably a very difficult concept, I think, for people who are new to the space to really understand from a financial perspective, is that it's really important to distinguish between risk and volatility. So Bitcoin is highly volatile, very low risk. And this is where people have that roundabout the wrong way. They think Bitcoin is risky because it's volatile, but they don't understand and haven't done the work on it. And speaking as someone who's spent probably over 10,000 hours looking at this and has a traditional background in finance and assessing risk for a living, literally my job is to help clients make smarter choices with their investments. It's basically also to mitigate any risk and try and, you know, get that out of the investment process. I look at this and I think, you know, from all the work I've put into this, and there are literally thousands and thousands of hours, people overestimate what the risk is to Bitcoin, and they overclassify the volatility, and they have those two terms confused. And if they understood that Bitcoin is the new risk-free asset, and the volatility is just a function of time, so just invest for a longer period of time. To your point previously, Bitcoin is the perfect asset for investing your pension in.
Yeah, and just a side note on that then, because I asked myself this question, because as an investor, I always try to find the counter narrative and push it on myself. I'm like, if you can see this as clear as day, and I can see this, not that we're on an IQ level, but why can't smart money managers? Is it that they haven't? And full disclosure, in all the stuff I've done in the health space, there's massive ignorance. Okay, even when I go and see a local GP now, and the basic nutrition advice that they're giving out, I'm scratching my head and going, that was in the 80s. Like, things have moved on since then. Don't you know that 9 processed carbohydrates a day drive cancer, stroke, heart disease, diabetes, and getting people overweight? Like, you know, saturated fat is okay. We've studied this over the last 30 years and we've disproven this myth. And it's just like, we still have that ignorance. So then I'm like, well, maybe it's just like, don't underestimate the amount of ignorance in this world, Vinny, or the amount of incentives for people not to actually look at their beliefs, challenge them, and take on new information and be able to have the flexibility to change. What's your take on why smart people, have they not done the time on Bitcoin, or how come they can't see what we can see as clear as day?
Show me the incentive, I'll show you the outcome. They have no incentive to understand it. Life's good. You know, they drive a really nice car, live in a nice spot, they make a fortune. Why would I want to rock this boat? You know, there's no incentive. There's no questioning this. And you're effectively paid to toe the line. What I find really interesting about what's happened in the last, say, month is, you know, Larry Fink, head of BlackRock, basically has said it's now okay, not a catastrophic failure for your career, to look at Bitcoin and potentially advise on it. That is a mega change that I don't think we've really felt the consequences of right now. But the other thing is, if you look at the classical financial training that you go through and the financial models that you use to assess risk, to assess an investment opportunity, to assess returns, basically they're fundamentally flawed and they're not congruent, or they're very lacking in understanding or valuing the potential promise of Bitcoin. Bitcoin doesn't have a yield. It doesn't have a dividend. It doesn't throw off cash, which makes it instantly very difficult to understand. And most people put that in the pet rock category as gold or silver as a commodity. And I totally understand that. But, there are some upgrades to the technology that make Bitcoin a whole lot better than anything else that's ever existed that we're just slowly starting to wrap our heads around. And, very briefly, there are 4 key tech innovations, I think, that have happened with Bitcoin, which means it's a completely different beast to a traditional commodity. The first is that, it's the introduction of absolute digital scarcity. So we have an asset that is literally hard capped at 21 million. We have an asset that's seizure resistant, so no one can take it from you. And to give you a comical example of this, if we look back over history, there's conjecture that the pyramids were built to house basically the pharaoh's wealth into the afterlife. If they had Bitcoin 5,000 years ago, or whenever those things were built, we wouldn't have pyramids because the pharaohs would literally put 12 words in their head. They'd be thrown out in the desert and they'd just be a rotting carcass and we'd never know about it. So seizure resistant is a real thing. And this is where, to break the illusion for any newbies to Bitcoin is, everyone thinks they've got assets, they've got property rights and the rest of it. They don't understand that they have property rights extended to them on the good graces of the government that you live under. Now, nowhere was this made more apparent to me than 2 things that happened in the last 2 years. The first was the Canadian truckers having their bank accounts frozen without any due process. And, I consider the countries that we live in, have a little to thank, Western democracies for, in that we have a rule of law. We have, pretty good a pretty good legal system that provides for fairness and equity in our decision making under our legal jurisdictions. But this was this really turned upside down the whole provision of innocent until proven guilty, which is what our entire Western canon is built on. And for me, I took issue with that. Now, I don't want the Canadian truckers, it's not my bag whether they're protesting or not, but I want them to have property rights. Now, the other thing which is quite egregious is, we had the US and the SWIFT system also literally take an entire country's national savings that were on that network, being Russia, and say, we're not happy with what you're doing. We're going to take your foreign reserves and hold them. Now, and a third point to that is, I never thought in the year 2023 I would be sticking up for Russian oligarchs and saying that they have it tough. But I still want them to have fair process, that if you're going to steal their boats and take their football clubs and everything else from them, I'd like to see a charge brought against them and then have that adjudicated fairly in a courtroom. But there was none of that. It was just, we're going to have a grab here, a grab there, a grab there. And this is where the second innovation, seizure resistant, is really critical, because if you store your Bitcoin properly, and probably all the hard work you do and I do is teaching people how to do that, no one can actually take that from you, which is a wild concept. The third one is censorship resistant, meaning anyone can transact if they apply the rules of the network. And the final thing is having an immutable supply, ledger, and issuance. Those 4 innovations really changed the whole dynamic of what Bitcoin is. And this is where, from a traditional finance perspective, no one talks about that, because the crossover between technology and finance doesn't happen. So, yeah.
I'm just giggling here thinking about it, because it's so big. Even just to pick up one of the points of the ability to die with your Bitcoin, it's like, your family are going to have to treat you well when you're getting older, because they're like, he mightn't leave me anything. It's not like, because I've seen people pass away and the house is getting ransacked and everything's just, and all the family, they don't care. Just give me the money. I know there's money in the house. I know there's jewelry in the house, and it's horrible. But this is just like, you never came and visited him for the last 20 years. Now you ransacked the house when he died. Not with Bitcoin, baby. You ain't kind. No. You ain't looking after that. When I'm at home, you ain't coming visiting me. Well, baby, there ain't going to be a sat left. It's so game changing.
It's crazy, and this is where to one of the things that I find really interesting is that there's no appeal to authority. with Bitcoin. You either have it or you don't. And this is where we spend a lot of our time, I think, educating clients on ensuring they understand what that actually means. So if you've got stocks or property, you've got a land titles office that you can appeal to, you've got a share registry that you can appeal to. But with Bitcoin, if you don't get it right, there's no one to talk to. Literally zero people. No one can help you. You've just lost your Bitcoin and you've made a contribution to the network. And, if your kids don't come and visit you and are kind to you, then, they're going to be pretty pissed about it. And there's nothing they can do about it because you'll be in the grave and they'll be drying their eyes in a beer.
Yeah. It's hard to get your head around what implications that leads us to over the decades and that, but it's going to be a profound difference.
Yeah, it's going to change behaviors dramatically.
Yeah, I think for the positive, and even if we look at a war perspective, you bomb the place, you get the gold, you bomb the place, you take the oil, you bomb the place, you don't get the Bitcoin. So as Bitcoin monetizes more and more of, individuals' net worth is stored in it, but also countries' net worth is stored in it, it sort of de-incentivizes the physical violence. It's sort, because you don't get the result of having the physical attack on it. Like, and again, that's huge, profound changes over the next 10, 20, 100 years of how we interact with each other. And yeah.
It brings in a certain level of courtesy that we need to provide. And if we want something, we're going to have to provide something that you want if we want to receive something. So I'm very hopeful for a huge societal change for the benefit of all mankind with the adoption of Bitcoin. And to your point, I think at the moment, we've got, say, $2,000 trillion worth of value accounted for. I can see Bitcoin basically holding $1 million trillion worth of value in it, and all of the other assets only accounting for the 2,000 trillion that we've got. And people look at that and say, oh, that's not possible because there's only $2,000 trillion worth. And it's like, look, you just don't understand how economics works, that, the market cap is downstream of price. So price is set at the margin and the market cap is a function of the price set at the margin. So it's absolutely possible to have $1 million trillion worth of value tied up in Bitcoin and only 2,000 trillion tied up in traditional assets. And to your point, the bombing of someone's city or the ransacking of their home and assets and things like that is going to be nullified by the fact that so much of our assets are stored in Bitcoin that is free from any of that. And when people figure out that ransacking and war and the rest of it doesn't pay, people will store more and more of their wealth in Bitcoin.
Yeah. Another thing I was just going to mention to you was the sort of medium of exchange aspect of Bitcoin. And again, I just look at stuff from 10,000 foot and I just say, if typical, because in my business I use Stripe, and when I look at the charges that I pay per year, I'm like, what the hell? I need to find a cheaper payment provider here. It's costing me a fortune, like, and I'm like, sure. So if I have the problem, Amazon has the problem, and eBay has the problem, and if they're paying, let's say they're getting it cheaper than me, and they're only paying 2% on their payment provider fees, but like the Lightning Network can take that to 0.002 or something. Like it's kind of a big deal for them who would operate on these tiny margins. And it's just like, I tend to get too excited about Bitcoin sometimes, but I'm just like, it's not just one thing. It's like it's coming after everything in the world. Like surely all these big entities, you think they're not going to be interested when they can make money, because it's just like, as you said, show me the incentive. Well, here you can make more money, you've got a better margin. Are you interested? Hell yeah, I'm interested. How does it work? Well, obviously entrepreneurs are going to have to build it, scale it out, solve all the teething problems. But the fact that the technology is available and works today, me as investors look into the future and go, all right, well, there's a good chance we're going to solve for this. And that is a massive use case. And it's just another adoption feature or factor for Bitcoin.
It's funny when you look around, like, that's a huge selling point. You look at, how much money is lost in transactions and how much leakage from the system. It's horrible. And this is where Bitcoin, Lightning Network, and I think Liquid, although it gets absolutely zero love, I think they hold the key to stopping that leakage and actually providing a different outcome. And this is where the major retailers aren't on a 2 to 3% cost per transaction, but small retailers are. They'd typically be on less than 0.5%. So it's a very different ballgame. But still, if they're making a 5% margin and they can drop that 0.5% fee to zero, that's a 10% increase in their net profit they've been able to achieve. So I think all of these things are coming. It just, when you see it and you want it to happen, it's, I get impatient and want everything to happen tomorrow. But, like Christmas, it'll come.
Yeah. I don't feel impatient. I just feel I'd love to have a time machine and just go ahead 150 years just to see how did it change the world. No interest in the monetary aspect. I've enough money. I enjoy my life. I've everything I need. But just did what we think it, like, is there a positive impact, or is there just a big red smoking ball left and we wrecked the place?
I've just got that vision of that meme with the evolution of man, and then the turnaround, we fucked up.
Go back.
Go back.
I've heard you speak a little bit about collateral, and that's how I see Bitcoin, as this really amazing piece of collateral. And I see it as the most desirable piece of collateral that a human can hold in terms of all assets and all pieces of collateral that we can go after. That's how I view it today. I think the rest of the world will view it in time. I don't know how long that takes, 10, 20, 30 years. But could you speak a little bit about the collateral aspect of Bitcoin and why you see it as great collateral?
So I agree wholeheartedly with what you just stated, that Bitcoin is the greatest form of collateral ever invented. The world hasn't woken up to what it is, but when they do, that will well and truly be used as the major form of collateral that we have. And this is another reason why Bitcoin's price basically is unbounded to the upside, that once people realize what it can give from a benefit perspective with collateral, basically there's an unlimited amount of credit that can go into Bitcoin on the other side. So collateral is basically used in the form of, or another word for it is basically security when you're securing loans or obligations. And, typically in Australia and probably Ireland too, the greatest form of collateral that you have is residential property would be number one, I'm presuming, much like Australia. And so if you want to borrow money from the bank, you put up your title deed, and that's a form of collateral. And the bank basically lends you money based on the value of that home that you've put up. Now, that's all good and well, but to put that collateral up as, for a bank loan on the home, think of the things that you have to do and check off to get that done. Firstly, you have to submit a credit application where they're going to review all of your income details to ensure that not only your income's sufficient, but your expenses are sufficiently low enough to actually pay for that obligation that you plan on taking. Secondly, they've then got to value the property and ensure that there's sufficient equity in the property to afford the loan that they plan on giving to you. So there's a safety of margin, or safety, there's an error margin built into that loan, so that if the property drops and you can't afford to pay it, they're not going to lose any money. So they need to assess that risk from that perspective and evaluation. They need their lawyers to basically go through and check any obligations on the property in the form of a caveat, a mortgage. There might be some sort of lien on the property that basically prohibits any lending on that, or there are existing obligations on the property. You need a lawyer to basically go through and check all of that. And that takes time and money. So, I've involved basically 3 or 4 professionals so far in this process to borrow money on the home. And in Australia, that process takes typically somewhere between 1 to 3 months to get that approved. So we haven't even got to the fact that we're actually handing over the title to the land titles office, and the bank is basically going to put a mortgage on top of it. And that's another legal process to it. So I'm looking at this and thinking, there are all the things involved in getting a mortgage on a home. Now, what's involved in putting up Bitcoin as collateral? It's simple. Can I move that Bitcoin to the wallet that you've requested or not? Yes. Okay, great. You can have the money. No, you can't have it. It's that simple. And because Bitcoin's liquidity is 24/7, 365, I can liquidate that as the lender, and I can basically stop you out of that lending at any point in time and recover all of the money that I've lent to you in an instant. Now, if I wanted to do that same process with using a home as property or an office or whatever, there's a whole host of legal processes that you need to go through in order to recover your money. Firstly, I need to Correct. You need to have at least 3 to 6 months of an unperforming loan where you haven't paid the mortgage. Well, shit, I'm already 6 months behind the schedule. What happens if the property prices drop? Well, all of a sudden I'm underweight in the equity buffer that I've got in that loan. You know, you look at some of the properties in San Francisco, commercial offices. There's talk that they've dropped 50 to 70% in value, and they had loan to value ratios on them of 70% lends. Now the lender is underwater 30 to 40% on that loan, on that property. Who's going to pay for that? And the funny thing about the system in the US is they just throw the keys back and it's a non-recourse loan and tough shit. Sue me. It's like, you know, it's horrible. But when you use Bitcoin as collateral, you never have to get yourself in that position. So if you look at lending, typically there are 3 C's of lending. There's collateral. So what are you putting up as security for the loan? There's character. You know, can you afford to pay this? And then there's character as in what's your lending history look like? Are you a good payer or a bad payer of your debts? And then there's capacity. Do you have an income to pay for what's doing? With Bitcoin, in using that as collateral, what's really interesting is you don't have to care about 2 of the 3 C's. You just need to care about the collateral. If you've got the collateral, you own the Bitcoin, you can liquidate it in a heartbeat. You don't have to have any recourse. It's just like, you haven't paid your loan, or the loan to valuation ratios dropped too low, we're selling and we're getting our money and we'll give you what's left over. So it totally redefines collateral. And this is what's interesting from a valuation perspective. Credit markets basically make the world go round. Whether we like it or not, credit is basically the driver of most economic activity here. And once we start, well, I might just reframe this. There is a severe lack of good collateral in the world. And once people figure out that Bitcoin is the best collateral they could ever want to hold, we're going to see the value of that go through the roof, because it's going to underwrite a lot of the credit contracts.
Yeah, that's how I sort of define it to my clients. I'm just like, we don't know in the future how you're going to be able to leverage this collateral and use this collateral. My just understanding is that this is collateral that is well undervalued on its true valuation, and I need to acquire as much as I can as a pension strategy for the future, and let entrepreneurs, let the financial system, let them build onto how they're going to use it. But if you don't have the collateral, you don't have the choice. And that's sort of how I frame it for my guys, is to just get the collateral.
And get as much of it as you can while you can.
Yeah. What was I going to say to you? Oh yeah, just by the way, guys, hit the like button there to support myself and Peter here today. You're getting some serious alpha. What I call here, Peter, is I call it the daily exercise. So what I do is, I don't ask for push-ups. I don't ask for squats. I say, stretch out the index finger, lads and ladies, and just approach that like button and give it a nice strong press. You know, by all means, do a few push-ups while you're listening to this, but it supports the algorithm and helps get the content out there to more people.
Well done.
I want to transition into sticking with collateral, but like part of our strategy that we teach our clients is to leverage our Bitcoin in the future, similar to what a property investor would do, so that you're never selling down the collateral, you're just risk managing it with a leverage on it. But I've heard you speak, and I hadn't heard this or thought of this before, that a bank will actually pay you to take out a loan if you put up Bitcoin as collateral. And that was I was like, whoa, that, and again, it was just like, yeah, that makes sense. Please tell us about this.
So it comes down to how the banks are going to assess what Bitcoin is. So it comes down to effectively 2 factions of Bitcoin, and great Bitcoiners at loggerheads here. You've got Nayib Bukele from El Salvador, the president of El Salvador, saying that Bitcoin's a currency. And then you've got Michael Saylor saying it's not a currency, it's a property, and they're at loggerheads. So there is going to be a decision made by the banks. Is this a property or currency? Now, if they determine it to be a currency, they can take that onto their books as an asset, on their books, a liability to us, and they can leverage that 20x because it's a currency. However, if it's a property, they aren't able to put our property on their books, and they can't leverage it. So for that reason, they're going to look at this and go, don't really want to classify it as a property, because then we can't leverage it 20x to basically lend out to other people. And so I look at this and think, show me the incentive, I'll show you the outcome. And the banks are going to be highly incentivized to classify it as a currency, because then they can lend out 20x the value of what you put on their balance sheet. And so you think about this, if, fast forward 10 years, we've got $10 million of Bitcoin. We go to the bank, we put that on their balance sheet. They say, great, we've just got $10 million. That enables us to basically rehypothecate 20x that amount. And so we can now lend out $200 million, and we can have a 2% margin on that. They can make $4 million. They might turn around to us and say, hey, we'll lend you $1 million and we'll pay you 100 grand a year to borrow from us. And that's how they can afford to do it, because they're making $4 million on that by rehypothecating. Now, I don't want to get into the risks of rehypothecating and giving you money to a lender, because we kind of covered that in the last 12 months. So for any viewers out there who are like, why would I do this? I'm like, I get why you wouldn't do it, but there's going to be people who want to do it, and there's going to be institutions who provide that. And just to show you that we're directionally correct, that this will happen, not it's a pipe dream, fairy dust. At the moment, you can go to Unchained and you can borrow for 12 to 14%, which is the best Bitcoin loan out there, I believe, from a risk-adjusted basis. You can go to a multitude of other lenders where you can put your Bitcoin up as collateral, and they will basically charge you somewhere between 6 to 8% to borrow on it, but they're going to rehypothecate. And then if you look at probably the most extreme example of this at the moment, and this is the last time I checked, so it might be 3 months out of date, but you can go to Abra and you can put up 1 Bitcoin, and they'll lend you 15% of the value of that Bitcoin, and they'll charge you 0% on that, because they're taking your Bitcoin and then basically lending that out to other people. And the interest rate differential, they're still making money on. So directionally, I can tell you that is absolutely happening now. And it's only a matter of time before a bank delivers on basically paying you to borrow money from them, because they can rehypothecate your Bitcoin. Now, the choice is yours if you want to get paid to borrow money on your Bitcoin, but just to know that, I believe, is coming down the road.
Wow, that's cool. Yeah, so we're already seeing it, and that's how I sort of think of it. I'm like, these are strategies that we'll use in the future. These are strategies that are available today, but I don't think personally today is the right time to do it, unless you want to experiment with a 1% of your allocation, because it's high risk at this stage. But as adoption progresses, understanding progresses, regulations progress, the quality of the institutions within the space progresses, the risk on taking on leverage and risk managing it is going to reduce. And in the future, it could be a strategy that you're like, well, 5% of my collateral I'm going to put at risk to earn a yield or to take on leverage, or and it's a strategy that I think will be adopting, similar to how traditional property investors have used their collateral for decades, I guess, or longer.
Exactly right. You look at the wealthy families in New York, they own blocks of Manhattan. They don't sell the blocks of Manhattan. They go back to the bank every 10 years and get another 100 million from them. Great, it's gone up another billion these last decade. Great, I can have another 100. And the bank writes a check for them. They never have to sell it. There's no capital gains tax. And this is where, to cover off back on, one of the first questions you asked, how is it possible that only the 900 Bitcoin minted on the day is going to facilitate daily trade when we've got a functioning credit market and stable coins on Bitcoin, and we don't have to sell our Bitcoin because we can use it as collateral to get a loan? It's really easy to see how we get there. We've already got 76% of Bitcoin in cold storage, haven't moved in a year. What happens when we've got real functioning credit markets with large institutions? There's going to be even less movement of that, and that number is going to go right up to 99% of Bitcoin won't move, I believe.
Yeah. One of my little thought processes on it was like, once Bitcoin went to, a monetary value, provided it just continues working, it's destined to suck in the majority of all monetary value. It's just a question of time. It's like once it went from 0 to 1, it's going forever until pretty much everything is sucked into it. It's like a black hole, I think, and it's like the bigger it gets, the better it gets. That's what I try and explain to people. But when I look at the property market, because we had a massive housing crisis here in 2007, 8, 9, 10, where we had a massive crash, and I still know people who were doing the typical thing. They had a job, they were working, they were trying to get ahead. The done thing was get out leverage, get a second house. The whole thing fell apart. Well, these people, some of them are still in bankruptcy, still can't own anything, and it's just like all they were trying to do was just get ahead the way anyone would. And I'm just like, okay, but the property market gets more unstable until the whole thing collapses down and then it rebuilds that bubble again. But the Bitcoin bubble is just the bigger it gets, the more stable it gets, the more political energy is inside the thing, the more monetary energy is inside the thing. Like it's just like, and then it's a self-fulfilling cycle. It's just like you're talking to your money manager and you've convinced him to put 1% of the portfolio in Bitcoin, and he meets you and goes, how's my portfolio doing? You're like, oh, we've done 12% this year. You're like, okay, break it down for me. Well, the property aspect of it has done 8%, and the 1% in Bitcoin has done 36%. And you're like, well, why don't we own 2%? And what does that do? It reinflates the bubble, which, what's that do? It increases the performance. So it's just dragging capital from everything into it.
That's the glorious thing. We get to basically sit here and front run that. And I think one of the things that we spend a lot of time on from a client perspective in making sure that we're set up to take advantage of that long term is making sure that the Bitcoin is in the proper structures, legal structures to benefit from that. So if I look around Australia, holding your Bitcoin in a company is not a great idea, because you've got something called a Division 7A loan that if you borrow money personally from your company, you're required to pay that back at an interest rate of over 7% in less than a 7-year period. Now, you compare that with borrowing or putting Bitcoin in your family trust or discretionary trust. You can borrow money from your discretionary trust at a 0% interest rate and never have to pay it back. And this is where, we spend a lot of time up front understanding what the client's plans are long term and making sure we've got the right legal structures in place, because it can have a huge result or a huge impact on the benefits the client gets down the track. And if we think all of this is coming, and I'm, proven directionally correct every day that, the crazy stuff I talk about actually is coming to fruition, then we want to make sure that, we've got the best legal structures and entities in place to benefit from that.
And when you talk about not the best strategy, like the way I see it is you can own Bitcoin personally, but then your company can own it, but your company owns it for a slightly different reason. It's for the company's health. You have it for your own personal financial health, but the company can have a Bitcoin treasury reserve strategy, similar to what Michael Saylor talks about. And although if you own the company, it also benefits you, but it's for the company's financial health. And so I sort of define that as two strategies. And, if you have a company, well, why not play both?
True. And this is where, depending on how you, and this is where I've got to say I probably need a bit of help from some accountants / estate planners in Ireland to get up to speed on this. But I can tell you that basically across all English speaking colonies, we fundamentally defer to British law. So we have a lot of similarities. So although I might not have the technical terms for it, do have an understanding of how it works. And this is where with your company, you might actually have a company running and operating, but it's actually owned by the trust at a higher level. So you still get the benefits of being able to do that lending at a 0% rate and not have to pay it back, but you don't have the imposition of the local tax agencies mandating what interest rates you have to pay and when you have to pay it back.
Very good. Awesome. Brilliant stuff. Coming close to the end now, but I just couldn't let you go without talking a little bit about Bitcoin and time locking, because effectively it's transcended law, which is and it's in more than one regard. I think proof of work has transcended law as well. But in terms of time locking, just for some of the listeners who would never have heard of this aspect, then could you speak a little bit about that, please?
Sure thing. So Bitcoin throws up so many different and unique things. We've talked about a whole host of them, and I don't think we've an hour doesn't do it justice, right? But one of the quirks that Bitcoin throws up, which is completely unique from an asset perspective, is the ability to time lock it. So if we think about what a time lock is, typically, a safe at the pub would have a 2-hour or 1-hour time lock on it, so that if someone comes in with a shotgun and says, give me your cash, no problem, we'll punch in the code and there's an hour or 2-hour release before the door opens and they can take the money. So, basically an armed gunman needs to sit at the pub bar or the bar for an hour or two.
Have a few pints.
Until this things open. So basically, here's a pint, sit down, get comfy, and when it opens, we'll let you know. And you think, wow, that's such a powerful concept. But when you apply it to Bitcoin being in the digital space, that there's no way to touch, feel it, and you can basically send your Bitcoin time locked into the future, all of a sudden, this represents a whole host of fundamental changes that I can't, well, I try to think about some of the implications of this, but, we can effectively put our Bitcoin into cold storage. And it's the coldest of cold storage, because if you time lock your Bitcoin, what happens is that Bitcoin basically is not in this wallet, and it's not in the wallet you sent it to until that certain block height or time in space is reached. And so you could time lock that Bitcoin for 10 years. And so imagine someone coming in to take your Bitcoin, a $5 wrench attack, and they say, right, give us your Bitcoin. It's like, oh, mate, I'm really sorry. I've just sent it through 10 years into the future. Like, sit down, we'll have some birthdays. We're going to get to know each other. Like, either that or come back in 10 years when it lands in the wallet and we're going to be good. And I just think this, to the discussion we had earlier about, the societal changes that it'll make, because war won't be, profitable to do. The same thing with forwarding a Bitcoin to the future is no one will be able to take it from you. And all of a sudden, this has some serious implications. And now, where I look at what will be, probably one of the first use cases for it is in an insurance case, or alternatively using it as collateral for bonds or, all sorts of financial contracts. And, for the first time in history, the problem with collateral is that you never know where it is. So the derivatives market is basically the biggest market that we have. It's a really opaque market where no one has a clue what's going on, and no one really understands all of the, the obligations that underwrite all of those contracts. If you underwrote all of those contracts with, a time lock Bitcoin, all of a sudden, everyone knows exactly where everyone stands. And so there's going to be no shenanigans in that market. It comes completely transparent. And two things work there. Basically, a huge amount of Bitcoin goes into locking up those contracts. And secondly, basically, the value of Bitcoin goes through the roof to underwrite the collateral of those contracts. So the time locking function has so many features that I look at. And then the final feature I look at and think, from an estate planning perspective, which is where I spend a lot of my time, basically talking about legacy and, how clients want to leave their legacy to their loved ones, particularly their children. Time locking represents a feature that we've never seen before. We can time lock a Bitcoin to land in a wallet maybe 75,000 blocks after the halving, which historically speaking has been the peak of the bull market. And we could do that every 4 years. Or if we didn't like our children, we could basically time lock that Bitcoin to come out at the bottom of the bear market.
You wouldn't do that, no.
And so they've got to spend double or triple for the same thing. Now, it depends, to your point earlier, if they come and visit you in the old person's home, then, you let it come out in the bull market. And if you don't like them, you let it come out in the bear market. So, there's all this I joke about it, but there's all this programmability that, we've never seen before. And this is where, to your point earlier, the legal profession is going to have a very hard time comprehending that we can time lock a Bitcoin, and regardless of what the legal mandates are that basically get forced upon us, there's nothing we can do to break that cryptography to make it happen any quicker. So they could have a...
You go through a divorce, it's just like, sorry, love, you can't get the money for 15 years.
I mean...
You're stuck with me.
And this is the glorious thing that, all of these things that we could never dream of before, because there was no asset that was above the law. Yeah. And all of a sudden now we have an asset that basically doesn't care what the legal system says, because in the universe, when it comes to the laws of the universe, cryptography rates far higher than our legal jurisdiction, does. So, the legal system is going to figure that out pretty quickly, that, oh my goodness, he's time locked it, and there's nothing we can do to get that Bitcoin back until it reaches the so-called block height. So we're going to have to just sit here and wait. So, whether it's the state trying to take your Bitcoin or, a $5 wrench attack, it's going to be fun to watch, basically society change in dramatic fashion, I think, to accommodate for that new type of feature in an asset that we've never seen before.
Yeah, and even the legal side of it, of by time locking and contracts. Like, what does that change to that aspect of the world of contracts, that they now probably don't need the regulation oversight anymore, because it's just
No,
collateral backed. You know, it's and
correct.
it's and again,
And
I
it's
think,
100% verifiable.
yeah, yeah.
That's the curious thing. Yeah.
So it's so secure. It's so simple. It takes 10,000 hours to realize that, the simple way where it's going to work. Like, that's the irony. It's cruel irony. Like, but I was only tweeting Simon Dixon earlier, and I was just saying I can't wait to see the films that are going to be made on this adoption story, and Satoshi's releasing this thing to the world. You know, in 10, 20, 30 years. It gives me goosebumps, like when I'm describing it to clients, and I'm describing how Satoshi released it, and it's like such what a story. Like, what sort of films are we going to make over this?
Wild. And this is where, I don't know about you, but my imagination goes into overdrive, thinking about, what stories will be told in the future. And, my genuine hope is that, from all of the work that I put into this is the first time I've seen a single thing slash asset slash software protocol that has the ability to unite 8 billion people in one common cause. So for me, show me the incentives, I'll show you the outcome. I think it has the ability to basically deliver an alignment of incentive that we've never seen before. So for that, I'm very hopeful for the future ahead of us. And it just basically requires one thing, basically Bitcoin to keep working and humans to keep on being greedy and fearful, because
Yeah, that ain't going to change. Um,
no,
Before we hand off, please tell us a little bit about the Bitcoin Advisor, and everything you do, and where the guys can find you as well, Peter, please.
thank you. I run a business called the bitcoinadvisor.com. That's the website with an ER. We run basically an advice business taken from my work over the last sort of 2 or 3 decades in giving advice to families, high net worth families. We've basically taken all that we've learned in the last 6 or 7 years, giving advice to those families and helping them in a collaborative custody arrangement, and taken that to the Bitcoin Advisor, where we basically help anyone who requires help to use a multi-sig arrangement to securely store their Bitcoin in a collaborative fashion, where we've got a software provider holding a key, the client holding a key, and we hold a default key for all our clients. This has typically meant that clients have peace of mind, that they can know that if something were to happen to them tomorrow, or they step in front of a bus, that all of the hard work that they've made and the sacrifices that they've made to get to this point in time aren't going to be for naught, that there's basically a protocol in place that their family can institute to recover their Bitcoin, and that their beneficiaries aren't going to make a contribution to the network with no appeal to authority. So for me, it's been a 7-year process in defining this, and then basically delivering this to clients globally. So we've been really fortunate. We've got clients all over the globe. We haven't got any in Ireland yet. You must be too good at your job. So
We might get you a few sent over. Don't worry.
yeah, but we look after plenty of clients in Europe, the US, Mexico, Singapore, New Zealand, and Australia, and it's been a fabulous service which provides peace of mind. And one thing that has been a curious sort of back end of this is that, in addition to helping with collaborative custody, we've been able to sort out that Bitcoin legacy for families, that ensure that this becomes a really big part of people's lives, particularly as they sort of approach the inevitable, that they think, how am I going to leave, my legacy to my loved ones? And a sound estate plan can have a significant impact on, their loved ones. And I just think one of the messages, for anyone listening is, a sound estate plan is something worth investing in. It's really important to ensure that you leave, all of your assets in a suitable legal structure that's going to provide asset protection for your loved ones, and also give some tax benefits to that. And I spend a lot of my time in that area, because we worked so hard to get to this point in time where we've stacked for years, we've saved, we've made huge sacrifices to get to this point, and then to blow it on an own goal at the last, when you're over the line, drop the ball. it's maddening for me. So one of the things that we do is, if clients want our help, please give us a call. And if they don't, there's a collaborative custody protocol that we've basically given to the world that we hope they can use as a checkpoint for their own resource, that they're doing everything they can to deliver that Bitcoin to their beneficiaries if something were to happen. So thank you.
That's fantastic, and we'll share your website and your Twitter handle in the show notes. And it's probably the most important thing. You probably experience it. I know every week horror stories, and I'm just like, all you have to do for the next 10 years, right? To my clients, as I say to them, I was like, all you have to do, acquire the collateral, and don't lose the collateral, right? So this is all you have to do to win here. And you don't have to risk it. You don't have to pivot or trade or do anything or sell tops, buy bottoms. Just hold the collateral, secure the collateral. It's simple, but it's not easy. And I get horror stories all the time. I got tires fit in my camper van during the week. He lost 1.2 Bitcoin because he bought a cheaper ledger on eBay instead of buying it from their site.
Ledger.
It was a Trezor, and he bought it on eBay, and it was maybe 30 euros cheaper. So he saved himself 30 and cost himself a million, 10 million, 100 million. You know, it's just, it's horrible. Yeah. And that's why I try and communicate this to people, that if you're coming into this space, it's a new space, because it's collateral based and a bearer asset. You can, as you mentioned earlier, you can screw up, and it's so important. If you're going to come into this space, if you're going to invest some of your life's energy, fair enough, you're going to just start slow and dollar cost average, tiny amounts, learn as you go. But if you're, someone who understands investing and invest into education as well as assets, because it's a very hard lesson that guy learned by losing over a Bitcoin on something as silly that me or you would have obviously said, like, clearly you don't buy your Bitcoin wallets from third parties. But unfortunately, this is a new space and people make these silly mistakes, but they're so costly. And that's why the service that you guys are providing and all the estate planning and everything, it's just, I believe you're positioned so well as we develop into the future. Like,
yeah, and this is where the need for all of these services, what you do, what I do, are so valuable. And this is where, being in Bitcoin now, we are the 0.1% of the very disagreeable. And, there are certain character traits that go along with that.
I've spent my life here. I've been early to a lot of things, and that's my signal. That's how I know.
Yeah. And the funny thing I look at and think, and this is where I get some pushback on, say, the service that we deliver, is if we're going to encourage the remaining 99.9% of the population to come into Bitcoin and self-custody, some clients aren't capable of doing it all themselves. And
the majority of the world is what I would say. The majority of the world is not. Look at our society now. We don't want to take responsibility. We want someone to hold our hand, do it for us. And that's fine and perfect. And that's why I think any pushback, it's just nonsense. It's from people who don't understand the real world.
No, and it's horses for courses. And this is where, like all things, it's a spectrum. There is the absolute hardcore, which is the majority of Bitcoiners who are here now. And then there are people who want to leave their Bitcoins on FTX. And I'd like to think that the service we deliver gets to, that Bitcoin maxi Puritan model, or gets as close as we physically can to it with the trade-offs that we make. So, the great part about this is, we get to speak to Bitcoiners all over the world. Being able to have a chat to you and hear what you do and talk about Bitcoin is just an absolute treat for me. And, I feel like probably how you do, in that, we're out here doing God's work to get people into Bitcoin and hopefully show them a better path that can provide financial freedom for them. So hats off to you for all that you do, and appreciate you being there doing it.
Yeah, thanks very much. I'm going to sign off here now. Peter, thanks very much for coming on. I'll chat to you in the after show just now when I hit the recording. So thanks very much, Peter, for today. It's been absolutely awesome.
Thank you. Cheers.